Hi, my name is Scott Hoover, and I'm the owner and broker of WeDoHardMoneyLoans.com. And I'm here to tell you a little bit about hard money. And I'm here at my office where we're based in San Diego, California, on 1431 Market Street. The reason that I'm doing this video today is to explain a little bit about hard money, how it works, and maybe take away some of the mystery and some of the thought that you might have as hard money being something that might be a negative thought. Hard money has been around for a long time. It's a private investor source for financing real estate, and at WeDoHardMoneyLoans.com we have sources available for funding in all 50 states here in the United States. Hard money basically now has gotten to the point where it is really only applicable for investor loans. And what I mean by that is people that live in the houses or the owner-occupied are not really privy to it. It's not available, and most investors only fund for the people that fund the loans only fund for investor-type loans. Whether that be refinances, which would be rehabs or what have you, or for purchase money. Most investor-type loans maximize at 75% loan to value, and typically your hard money loan will be at 65 or 60. The reason why people use hard money is that the conventional sources don't always work based on all the individuals' occupancy, whether or not they have credit issues, whether or not they have income issues, job stability, what have you. And because of the recent state of our economy, pretty much a majority of the investors out there have some sort of funding issues. And another one that hard money can do is it can outperform conventional financing normally in terms of timing. A lot of investor loans can be done in 3 days. The majority of them are done in about 14 to 21 days, and sometimes even 30. Hard money is available for a lot of different reasons today, and what we've seen in the increase in values in real estate is that most people that are investing in real estate are buying these homes, they're fixing them, and then what we're doing is a conventional flipping them. So what will happen is that you'll find a piece of property for, say, let's just take for example here in San Diego, $350,000. It may be a multi-unit, and you'll buy it for $350,000. You put 30% down, or roughly $100,000. So, and then you need to put another $25,000 to $30,000 into it. Hopefully, you'll sell this somewhere between $450,000 and $500,000. So at least when you're buying these properties, your return on investment is 10% or more. We've seen that market tighten up a lot lately. There's a lot of competition for the real estate. Real estate right now is probably the hottest product to invest in the United States. So there's a lot of competition to buy these properties, and now we're seeing the value starting to go up again. And they're not at the point of appreciation that we've seen in the past, but you can be relatively sure if you buy something right, or you buy it at a reasonable price in a reasonable neighborhood, and it needs some work, you can fix it and turn it so that it can sell immediately. And because there's no inventory, many investors are coming in and buying these properties and getting them ready to sell, and then first-time home buyers are coming in with conventional financing at 3.5% to 4% and buying these properties immediately. So what we do is provide financing for the investor, whether it be the investor is taking title in as a sole proprietor or in an individual name, or whether he's taking title in a business or an LLC. These funds are available. The other nice thing about there's several good aspects to hard money loans. But one of them is the appraisal process, which has now become, and if you do a conventional financing, is now government regulated and has to be done through a third-party source. With hard money loans, we can order our own appraisal, and all parties are privy to the information, and it basically just works a lot smoother than the government mandated real estate appraisal ordering system. The credit is really a critical issue within hard money loans, because what we've seen is the eroding of credit in the consumer over the past 4 years due to job issues, whether it be too much debt, whether it be increase in monthly payments or what have you, and an eroding of the monthly income. Hard money loans don't really take into effect credit. Now, they can justify raising credit or the interest rate on certain loans based on the fact that somebody may have extremely poor credit, but usually your interest rates are resilient in the hard money that they've already factored into, because it's already factored into also with the combination of that and the loan to value. Another area that we've seen is a lot of people's income have dropped over the last few years, and if you have sufficient down payment, the income is not an issue also, along with the credit not being a big issue. So for those reasons, income, credit, job stability, appraisal, timing, expediting the transaction, hard money is a viable alternative in today's market. If you have any questions, please give me a call. Again, my name is Scott Hoover, and my phone number, I give it right out, 619-933-7085. I also have an 800 line, which I'm not sure what it is, but Nick's going to give it to me here in a second. I look forward to working with any of you, and I do work in all 50 states. My 800 line is 800-965-5370. Thank you.